28th, 2015. We like the short side of the stock market starting out today. We thought it would test support, felt that it would hold in the 2025 area, 2030. That was not correct. The market has been selling all day long. The market is headed lower. The Fed made their statement right here. Statement was taken as hawkish. The economy is strong. The Fed's not going to come out and say the economy is weak. They said they'd be patient raising interest rates. So market has read that the Fed will raise interest rates. They're going to head down that path because the economy is strong enough. Raising interest rates sells stocks. So here we find ourselves at lower. I think the economic news is weak enough that the Fed's going to have a very, very difficult time raising interest rates. It's just they've taken us into this path, and it's going to be really, really hard to do much differently. Lots of good trades today from the short side. Once again, the market just kind of opens up and does nothing for an hour or two, and then all of a sudden it starts its move. So good signals from the software. They were in the right direction. This one little period in here where there was some buying, but the 50-lot trader was primarily on the short side. Started to buy in this area. And look what happens now when the market starts to sell. They're in here supporting the market, and this is the Fed right here. When you see the 50-lot buyer buying every downtick, rational, sane people won't do that, not with their own money. Had some good short covering into the FOMC, pretty quiet. The news announcement comes in. Good sell signal there. There is no signal here. There is no signal there. There is a signal there for a loser, kind of choppy. The market is headed down, and this is your retest failure trade, signified by the green dot. So I think the economy is weakening, and I don't think the Fed could come out and really talk honestly about what's going on from Texas to North Dakota. And we saw new orders in the Dallas Fed district collapsing. So the one sector that was responsible for all the jobs from 2009 is the oil or the energy sector, and it's that's being knocked on its rear end. So anyway, we like the short side of the market. Saw a trading range moving sideways into the FOMC. It did move sideways for a while, then it sold. Short covering into the announcement. Here was the announcement. The announcement is deemed bearish for the stock market, and it sold. An interesting article, go look it up on Zero Hedge today, was talking about what the quantitative easing really means. It means that the economy is so damn bad, they have to offer it out there. That's all that they can do. As opposed to being a bullish thing, which is what it's supposed to do, is to bring everything back. Kind of a last resort deal, and that's kind of been, the feeling in the room ever since they've been doing it. They wouldn't do that if the economy was good and if it was coming back. Okay, on the E-mini, lower high, lower low, find a place to sell it. If we can't extend and take the market lower, cover your shorts. So the F1 screen says be a seller. I'm going to move this up here. If the market were to close right here, you got a structural sell in the 15 area, give or take. You got a structural sell in the 25 area, give or take. You got the last rotate up in M and 20 at 20. So first sell is going to be 15 to 17 if we were to close right here, and then our 20 to 22. On the buy side, our 5 area will be buy 1. And then to the 95 to 90, I think if 5 comes out, the 95 to 97 area would be the other spot that we'd like to get long. This market looks pretty bad. Tomorrow's news, jobless claims, 315, pending home sales up 0.6%, natural gas inventory. So I don't think tomorrow's news will have a lot to do with the trading tomorrow. Okay, Jeff puts up an comments on IBM global layoffs. There was IBM's stock rallied because the rumor was IBM was laying off to upwards of 25% of the workforce. That would be 100,000 workers. It won't be that big, but they are going to lay off some. I don't know what the number is going to be. Jeff says 112. It would be 25,000. That would be an unbelievable layoff. There would probably have to be some buyout, restructuring, divisions sold to do that, which could happen. And Jeff's also of the opinion that the Fed can't raise interest rates because of the mess everything is in. Okay, we have an outside day, but we're going to get a strong close right here. We're going to retest these recent highs. Part of the buying are shorts. Part of the buying is just out of fear. The treasuries still have significant shorts off the idea that the Fed would be raising interest rates again this year. It's a long-term, it's a macro play. It's just hard to say that, it's just hard for me to see that they'll be able to do it in any meaningful way. Number one, the budget deficit. If they were to take the portfolio interest rates back to where they have been historically, that would mean debt service would be $900 billion a year. It would jump up from the 250, 270 billion per year. Can't really happen. Okay, 30-20. We're to close right here. We'd be selling to take out, failure to take out 20 to 24. And then 28 to the buck. On the buy side, last rotate down was 13. We had our breakout from 6 to 7. So this will be retested. I don't know if it will be tomorrow. We have the 5 to 7 year auction. They may not take place at this level, but they'll probably be above our 29, 28.5, 29, which is where the 2 year got off today. So structurally right here, a buy would be in the meaning against, say, 7 to 11. So let's put a buy 1 down there, and we'll put a question mark at 13. And then the second buy would be 1 to 5. And if you look at what's going on in the Ukraine, that's heating back up. I mean, who in the hell knows what's going to go on in Syria and Iraq. But the longer that goes on, the harder it is for ISIS to do what they're going to do. I mean, just logistically, they cannot, they're out in the open. I mean, it is shooting ducks. They just, you can't hide. What best thing they have going with them is a reluctant White House that doesn't want to engage them. It could happen. They won't arm the Kurds. They won't arm the other people over there. So we're their best ally. Can 153 be that far away, the way this thing is trading right now? I mean, it is a strong market. The NUP spread started off this morning at 20.02, and it's at 20.23, up 5/8 of a point today. Okay, we're going to sell failure to take out 16 to 20. Probably is a short tonight. Things may have gotten out of hand, and we've got the breakout here that came out of the 29 area. So the 29 to 01 area will be the buy zone. May have to pay 5s to get in. Just a lot of it depends on what goes on in the E-mini. And 21 to 25 beneath that. You know, people look back on history as pretty calm, and things, you know, you wax nostalgic about the old days because your problems of today seem to be Well, they certainly take precedence over that. You kind of forgotten what you had to go through back in the old days. But, you know, one of the things that we had back in the old days, we never doubted the future, that the United States would stumble through and that tomorrow could be better than today. And I think a lot of people look out right now and say, can tomorrow be better than today? Given what's going on in Washington, D.C. and tax policy and regulatory policy, no matter who's in charge, is definitely anti-growth. And growth solves a lot of problems. I mean, I think a lot of people wonder today, I mean, who would, you know, make a government policy that your kids live with you till they're 25 or 26 years old? I mean, who in the hell wanted to, who wants their kids living with them at 25, 26 years old? They got their own lives to lead. But, you know, that's kind of becoming accepted right now. It's, I don't know. The economy is a state of mind. It's the willingness to forego a dollar to make more than a dollar somewhere down the road. And I don't think a lot of people are willing to forego those dollars. And they're, you know, you're kind of risk adverse. You kind of pull in, and, you know, so the willingness to do something in the future as opposed to right now is, I think, lacking. Okay, gold down here. If the E-mini continues to sell, I doubt if gold will break. So the 75 to 80 is a pretty good buy zone. That said, on the sell side, where 90, 92 will be picking up the top of value, and then 95, 97. I don't think the Fed said anything today that would make you want to go out and buy nor sell gold, but the E-mini's reaction to it probably reinforces that. Anybody believe the Fed that we've got great economic growth? Did you all see where Canada revised all of their 2014 job gains down by 35%? That's kind of scary. You think about the guys that keep the stats and do that, and oh, we just downward revision of 35%. Like, you know, what the hell? Crude's headed lower. I don't think anybody believes the Fed report that things look pretty good in the United States. I mean, we're so close to 43. We'll just open it up to 43. Probably won't get there tonight, but maybe tomorrow. And looking at where resistance is, 75 to 45. 45 is one of those round numbers, and 45, 50 to 75 for sell too. So when I come in and look at this, I mean, it's opportunity for us. I mean, we can prosper in good times or bad times because we've got the short side of the market, and we don't have to make investment decisions 4 to 5 years out, 1 year out. That's gotta, I mean, it gives me peace of mind. I mean, I don't worry about, will I be able to figure something out down the road, but think of most of the people out there that can only prosper if the economy prospers. They're in a much different boat. Most people can't make money unless the economy is moving sideways to higher. And that's just in a much different situation. And that's something to be grateful, you know, at least for us. Okay, the euro. I think any rally in the euro should be sold. As you all well know, I'm not a fan. The only time I like to get long in the euro is covering a short. Nothing in today's FOMC supports a higher euro. If you believe the Fed, our economy is a hell of a lot stronger than theirs. Sell the euro, buy the dollar. You can get paid money on your money over here. You're not looking at a negative interest rate. Okay, bottom of value right here is in this 20 area, so 20 to 30, sell 1, and 40 to 50, sell 2. Folks, that's it for January the 28th, 2015. I will see you bright and early in the